The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Welcome to the week of July 24th. We're going to take a look here at the DAX index like we usually do. As you can see, we've been talking about this 12,000 level in the DAX. And if you'll notice that we are making a large ABCD pattern, the structure is about as perfect as it can get, as the rally was exactly 61% and 78% of the previous highs, and a little bit lower here, about another 100 points, and we're going to be spot on with an ABCD. And we're also coming in at a new moon. So that'll be very, very interesting. Remember that the DAX has been going down while the stock market here in the U.S. is going up. So those cycles, could be exactly different, but we'll find out. At the break today, we're going to have a special guest. Mr. Arch Crawford of Crawford Perspectives from Tucson, Arizona will be our guest at 9:30. And we will have him and ask him a few things about the market and some of the things that he follows, particularly the gold market, because Arch is very, very good in stocks and gold. And he always has good information for us. Now, I wanted to answer a few questions from some of our listeners. One of them is about the natural gas. And when we finish with that, we'll move over to the grains and we'll talk about wheat for a little bit. But we'll talk about natural gas here. And you'll notice that since February, we came down and we made a 61% retracement down there around the 4th of July. Then we had a pretty good rally. And then the last couple of days, we've had this really sharp sell-off. This could lead to a pretty good buy down here, folks, another 5 cents lower in the natural gas. The only thing that you have to worry about is that big down day that we had on Friday, because if it continues, this could be a very, very quick move to the downside. So the risk on this, if you were to do this trade, I've noted it as a low risk buy, and that would be around 3 cents. So around that 291 level, if it gets to 289, I would say there's something certainly wrong with this, and you would want to step aside. But right now, it's in this really big trading range going back from November, where it hit 401, and then that was December, and then it came all the way down to 253. So there's a lot of movement in this natural gas. But right now we're seeing a little bit of higher bottoms and a little bit of lower tops. So we're in a really tight trading range here. But the lower risk one would be here. If you wanted to be really safe, is wait for another pattern to complete. This is just a retracement pattern, and those, they only have a probability of around 55 to 60%. So if you wait to see if you could get an ABCD structure, then you'd have several ratios coming together. That would give you a much better chance or probability of picking a spot that would be pretty good. That would be the lower risk buy if you had to do that. I only trade natural gas probably 3 times a year. This was just answering a question from one of our listeners, and that's all I was trying to show you. If it were my position that I were looking at, I would wait for multiple numbers to come in. In other words, give it some more time. You might miss part of it, but also you might prevent yourself from taking a loss. And remember, this is not a business about making money. It's about business of not losing very much. So keep an eye on that, because it could be something pretty good. Now, the next question that we had is about the grains. As you are aware, most of you that look at the grain markets, we had a very, very big move in the grains overnight. Well, 6-7 cents in corn and wheat, and 20 cents in soybeans, mainly due because the weather broke in the Midwest. It was 106, folks, in St. Louis on Friday. If you've ever been to St. Louis, folks, you have no idea what 106 is like. It gets to be 115 here in in Arizona, in Tucson, right before the monsoons in July, which we did hit 115 once this year. And it's very, very uncomfortable, but it is nothing. I mean, nothing like what it is in St. Louis at 106. It's right there on the Mississippi River, and the humidity is so bad you can't even breathe. I was there in 1955 for a baseball game, and I was able to meet Stan Musial and Enos Slaughter, and it was the most uncomfortable I've ever been in my life, as I remember. And it was horrible. I mean, you were soaking wet and you hadn't even moved. It was just unbearable, and that causes stress on the markets like corn and beans, and that's a big area for corn and beans. But the weather's broken now a little bit, so we want to watch it. Now let's take a look here at this wheat market, because we've got a chance here for a very low risk buy. And this is what, if we would relate this to what we're looking at in the natural gas, if you're natural gas, you were just looking for one little retracement. But here with the wheat, you'll notice that we have a 3 drive to a bottom pattern. We have a beautiful ABCD structure, and we have a 78% level, all coming in around the 509 level. And we're trading at around, I think around 514 this morning. So if it gets down there, not only that, but you're over the period of a new moon, which was this morning in New York, and the lunar things with the market are very good. Just for as reference, go back to the high back in June 23rd. Look at that. That was the last new moon, and look what happened. The market topped within 1 day. So that's an interesting one to take a look at, and it's still a bull market. I mean, we're making, higher bottoms for sure, but this is what I would call a relatively low risk trade, because if you buy it around, that 509 level, you can become a farmer for about a nickel. So for $250, you can be a farmer. So that's the one that if you wanted to look at, you've got multiple things coming together, and that's what you're looking for. It's just when you have multiple confirmations, all that's doing is telling you that there's cycles that are there that are coming in at the same time. Now, that doesn't mean they're going to work. It just means the probability is higher because you have more numbers to work with. Look at the high up here in the wheat. You didn't have much to work with there at all. I mean, you had a straight up move. It went from 486 all the way up to 594 with 80 cents without even batting an eye. The only chance you had was to wait and see the 78% retracement coming back, and that was just a retracement pattern. So it was a little more difficult. So with this one, you have more things coming together, and that's what you like to see as as a trader, because you have greater opportunity to control your risk and a higher probability of winning because you have so many things coming together. We'll follow this this week to see what happens. Maybe it goes through there very easily, but we'll see what's going on, and we'll watch it. Now, the other one that we're going to have a break here pretty soon. We want to have a question about Amazon. I'll bring this up, and whether we'll just start talking about it, and then when the break comes, we won't worry about it too much. But you'll notice here with Amazon, we have made a 3 drive pattern. It's quite asymmetrical, which is not very good. In other words, that high from June to July is not as good as you'd like to see. But we'll take a break here and discuss it in a few minutes.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
David White has just announced a new online course that he'll be premiering to his subscribers the evening of July 26th, The Next Wild Wild West of Computing. Machine learning will be the biggest growth area for tech companies in the next 10 years. Make sure you're ready to capitalize on that opportunity. With over 50 types of algorithms and growing, Dave White will tell you why there are so many areas for companies to apply this to their business to both sell and consume. Right now, you can get a 30-day free trial to either of Dave's newsletters, Path of Least Resistance and The Technology Insider, as well as get a 30-day money-back guarantee when ordering Timing the Trade charts. Don't miss out on the next Wild Wild West of computing as it premieres July 26th for all subscribers to Dave White services. For all the details and to sign up today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're going to take a look at this Amazon chart here over the past several months, going back to May. As you can see, this stock is certainly in the news all the time. And I think they own just about all the food franchising. Pretty soon they're going to be buying all the fast food franchises, I guess, so people won't even have to go out of their homes. Anyway, you'll notice that we did make a 1.27 expansion up in here, folks. It's when you got a stock that's trading at 1,025. I mean, this is not for the faint of heart. All I'm doing here is just showing you the ABCD pattern that is here. And as you can see, it does have some pretty good volatility, because in June, it dropped from dropped $80 a share in 4 days. Actually, it was within 1 day. And then again, back in June, it dropped from 1,000 down to dropped another $52. And of course, it's rallied to make new highs, but it has a great deal of volatility in this stock. So I'm just showing you the pattern that is here, and that's for you to decide what you want to do. But the main thing is if you compare this to what's happening with the composite for the NASDAQ, and you'll see here on the daily chart with the NASDAQ, you'll notice, just give me 1 second here. This one is a lot clearer, because you've got, I think, about 5,000 stocks in this NASDAQ, as I recall. It's been a long time. I look at that NASDAQ 100, but the composite, I think, is pretty close to 5,000 stocks. And you'll notice that that one has a perfect ABCD pattern both ways. All during June, July, you'll notice that perfect ABCD pattern that we had down on the 4th. And then we had the big move up on Thursday that stopped at the 1.27. That doesn't mean it's not going to go any higher today, but we do have a gap. And if notice that gap, if you go to the left and see the gap that we had back in June, you'll notice that we filled that one and came down very, very hard. And these patterns between A, B, and CD are very, very symmetrical. In other words, the amount of time that it takes to get up there is very important. Now, someone's asked a question that is interesting, but very, very hard to answer, and that is, how do you calculate the slope of the line between May the 20th and the high on June the 7th. In other words, the angle of ascent from that level, comparing it to the angle of ascent from where we are in July. That's a very good, interesting, because what you're doing is you're checking the rate of change as the market's going up. In other words, if it's going up at 6 or 7, let's say 0.5 to 1.5% a day, whatever it happens to be, you're comparing that in the AB leg to the CD leg. Now, there was a fellow named Brad Cowan, and he had something called the vector price analysis, I believe is what he called, where he did that type of work. The problem is, I looked at it, and Mr. Twentyman looked at it very extensively. We couldn't actually get it to work very well. We could see that, but we could see the rate of change coming in, but nothing was any better than just looking at the ABCD pattern and waiting for a reversal. That's basically, what we were watching at this particular time. So that's an interesting thing to look at, but frankly, I think you got to keep it as simple as possible, and you'll be much more, you'll be happier and easier on your mind, because you keep it as simple as possible. And that'll be easy, because remember, it's all about how much risk you're taking, and you don't want to have the analysis and paralysis, which you're just doing too much and waiting for an absolute perfect signal. You don't actually need that. That's one of the problems that I had with the Elliott wave people, because when I first started looking at Elliott way back in 1970 with John Hill, the folks were, they were really, trying to count all of these waves, and I had a difficulty time, because the way they would count them, it just didn't make any sense to me, because a 2-3 wave or a 3-5 wave wouldn't have a ratio there, and if I drew the lines in, I couldn't see the pattern that I wanted to do. So if I drew the patterns in, I could see a 3-drive, or I could see a butterfly, or I could see a Gartley. But to count the waves, I had a difficult time doing it. There's some guys that are really good at that, but frankly, I don't really do that. That's not the main thing that I'm interested in. Yes, the July 23rd full moon, new moon, came in at 5:47 a.m. Thank you, Mr. Z, for bringing that. It should be, I would think, relatively important today, and we'll go on from there as we go through these. Keep in mind that we have a market that I think is ready to go to the southern hemisphere, and that is the Treasury note market. Let's just put this up here so we can take a quick look at it. We did hit the 61% retracement on Friday. We're a tad lower this morning, so as long as we don't get above this 126.20 level in the Treasury notes, I believe that we're getting ready to go higher in interest rates. Whether that means anything or not with the rest of the markets, I don't know. But the Treasury notes and Treasury bonds have both completed rallies off of those bottoms. Again, all we're looking at here is a very strong 61% 8-day rally. It's just like in that natural gas contract, where all it was doing was pulling down. So you don't have multiple patterns here like you have with the wheat that we looked at. So those are different things that you have to decide of whether you want to be trading it. Another question that someone has asked is how many trades do I do a day? Usually I do about 3. Occasionally I'll do more than 3, but the only time I do more than 3 is when I'm in the zone. In other words, everything is moving, and I'm, it's just everything working good. And then I might do as many as 5 or 6, but average is about 2 or 3 a day is all I'm looking at. And believe me, I'm a pretty active trader, and and I don't do Twitter. If I did Twitter, I could probably do more trades, but I'm trying to, to isolate the ones that I think look the very, very best, and that's the easiest, because you don't have to You don't have to overtrade and stuff like that. The other thing is that I don't stare at the monitor all day long. I'm not in front of I'm here this 1 hour. I was here about a half hour ahead of time, just double checking everything. After this, I will not look at the monitor for about 2 hours, unless the beepers go off. I have beepers set very loud because I'm hard of hearing, and the beepers will go off and tell me that a price objective has been hit or I've been stopped out. And we'll see if that's going to be the same thing. We'll see if this is going to be interesting. Let me double check here because someone is giving me a little notice here, and we'll see if that's the case. Mr. Z, you're saying they've rejected higher prices. I don't think so. I think they stopped exactly where they should have. The February, at least that's what I'm showing. I don't see anything different than that, but I could be wrong. I don't know. Maybe my data's not coming in. I'll have to check that in just a minute, but I've got a break coming up here, and I'll check it at the break, but I'm pretty sure that's still valid. The last ones I saw were still in the zone. We were trading at the below that level. Let me double check, see if I can get that. I'm not seeing if we can here. 87, yeah, it's still working. 877-927-6648. Oh.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Wow. Okay. Boy, I'm having a terrible connection here, I'm afraid, folks. Arch, are you there?
Yes.
Oh, good, because I I thought I'd lost my Skype connection. Arch Crawford, Crawford's Perspectives. How are you doing, young man?
Very well, thanks.
Very good. Listen, the question that I have for you from one of our listeners to start off the show is, what is your feeling here on two markets in particular, starting with the stock market, followed by gold and silver? What is your opinion?
Okay, well, the stock market, the index numbers keep rising and rising and rising, but the number of new highs keeps dropping and dropping and dropping. So I say that the internal statistics do not support the price level, but so I'm expecting some kind of pullback this summer, and I don't know if it will. The biggest thing that's happening this year in the sky is that solar eclipse that goes all the way across the United States, and that's August 21st, and I don't know if that will be like the bottom of a market or the top of a market short term, and then but that we should get some kind of I wrote in the last letter that I was expecting a 4.5 to 8.5% decline sometime this summer, but I thought we would be higher as we move into December, January. That I expect the long-term peak to be December, January.
Okay. So you believe this this advanced decline line is giving a warning sign that not everything is correct?
Well, that sometimes has a lead time of about, 6 to 9 months.
Oh, wow.
How long has that been going on?
Yeah, that's for sure. Arch, what's the effect of these ETFs on the stock market? I saw something on Bloomberg over the weekend that there was only about 15% of the market was based on actual stock picking anymore, that it was pretty much all related to all algorithmic trading in these ETFs. I mean, do you have an opinion on that?
Yeah, I wrote that up a couple of months ago. That a few years ago, the public activity in the market was drifting lower and lower, while the algorithmic trading was rising and rising, and that in I think '07 it was in the algorithmic trading went up to 70%, and by 2012 it went up to 84%. Algorithmic trading, 84%. And then wow. I read that the following year, about 2013, that the bids and asks, not the volume, but the bids and asks were running about 94% from algorithmic trading.
Wow.
So I think that's a whole lot more effect than the ETF situation. But it is a warning sign that if and when things ever go wrong again, that it could be extremely dangerous.
Yeah, because I'm afraid that
will shut down, and the individual stocks. It happened fairly recently that there was one day that some individual stocks went down to a penny and all the way back up within, 20 minutes or an hour.
I've heard that. I remember that. That was some of those trades were disallowed or something, weren't they?
Yes.
Yeah.
But, that kind of glitch is not supposed to happen in the modern era, but
yeah,
I think that situations are more dangerous than they ever were.
Yeah, I think Buffett referred to them once as the weapons of mass destruction, and I think there might be something to that. I'm afraid that we're going to get into a situation like we had with long-term capital back in '97, where they had all these Nobel Prize laureates, and all of a sudden, they didn't realize that the market had two sides. And, that's what caused that, that big sell-off in 97, and they had to be rescued by Greenspan at the Fed. So I don't know how they could rescue all these little companies that have these algorithmic trading things, but that's neither here nor there. Okay, let's move on to the gold and silver, Arch. What is your feeling here? Because it looks like we've had some type of a breakout here from this $1,200 level in gold.
It does. Well, actually, right now the level is back where it was in the end of February, which means it could be a balanced situation that's sideways. But we do have it back above the 200-day and then back above the 50-day moving averages. And that's the breakout here in the last day or so of trading. And that's a very, very positive sign if it can break some other critical levels. I think in the last letter, I said it would help to close above 1280 and then 1300. It would hinder by dropping below 1215 and then 1180. So I would still stick with that. I'd like to see it above 1280 and then above 1300. And then I think the sky's the limit. But right now, we are in the middle of a trading range that's lasted all year.
Okay, we have a question.
Although the action is good, it's still in the middle of that trading range.
Yeah, we've had lower tops and lower bottoms too, so it's still in a longer-term downtrend. Arch, I don't know if you can answer this question or not, but one of our listeners is asking us. It's about Bitcoin. Do you know anything about that, or do you follow it at all?
I was reading today that some limitation on Bitcoin was raised, and that it went up 50% this week.
Wow.
That's huge moves, and some things are going to be allowed that weren't allowed before, or they got some big deal passed in there in the legal situation.
Wow, that's really 50% in 1 week. What's the price? Is it above 3,000 again?
You can try that. That's the wildest thing going on these days.
No. I like the slow stuff. I used to like pork bellies because they were wild, but compared to Bitcoin, pork bellies is like trading a AAA corporate bond. It's really crazy. Arch, can you believe? Arch and I are both the same age, folks, but he's actually 3 months older than me, born on April the 17th. But let's stay with us, Arch. We'll be right back. Arch Crawford of Crawford Perspectives, Tucson, Arizona. We've got a few bills to pay.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Trading is different than investing, but the opportunity to take advantage of short-term trends is only one if you get the direction right. Direction leveraged and inverse ETFs offer bold trades on U.S. and international stocks and bonds. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, with Arch Crawford of Crawford Perspectives. And Arch, we've got an unusual question. The question is, who are the most colorful people you've met in your 60-plus years of being in the market? Can you answer that question, or has there been too many of them, or not enough? How do you feel about that?
Well, I have met an awful lot that were very interesting. I had a mentor in Wall Street. His name was Basil Constant, and nobody will know who he is, but he was a personal mentor and took me through psychological changes and thinking changes and all kinds of changes. And he is the person who was closest to me in that regard. The second most that was personally close to me was David Williams, who influenced me in the
astrologer, Commander Williams,
analysis by astrology.
Commander Williams from Arizona?
Yeah.
Wow, I think he passed away in Scottsdale, didn't he, back in 89 or 90?
Living in Florida. He was always a director of the American Federation of Astrologers, which is in Scottsdale.
Yeah. Yeah, I met him once.
Florida.
Yeah. Yeah, he was a real gentleman, that's for sure. Yeah, he was he's in fact that book that he did.
Here's a funny story, okay? I left the University of North Carolina and went to work for Merrill Lynch in Raleigh, North Carolina. And I was marking a chalkboard and getting blue with the Gestetner copier.
Oh my
Blue
gosh.
ink on everything.
Yep.
And this is a long time ago. And there were a couple of kids that would run around in there every now and then, 2 or 3 times while I was working there. Well, the younger one was Louis Bacon.
Oh my gosh.
And the older one was Zach Bacon III, and Zach Bacon I was my boss, who was the office manager of Merrill Lynch in Raleigh.
Wow, these are some of the biggest names in the hedge fund business, aren't they?
Yeah, and Zach III called me and ordered my letter for Tudor Jones the day after the crash in '87, which I had predicted perfectly.
Yes, I remember that because we were chatting about it at the time. I certainly remember that. I was in Arizona, and you were in New York at that time. You didn't come to Tucson until '97, wasn't it, Arch?
96, right.
96, yeah, I remember that. Yeah, because Mark Douglas came in 97, so we had our own little trading group here for a while with Bob Miner and a whole bunch of other folks. One other question.
Is my favorite, Joe Granville was a personal friend.
Oh, I know that, yes.
And, of course, what's his name that just died a couple of years ago? Joe died at 90 about 3 or 4 years ago, and Richard Russell died at 91 3 years ago. And they both worked until the last week of their lives.
Yep.
And they were both market letter writers, and they enjoyed what they did. And I enjoy what I do. And I plan to last that long, too, which is doing the letter another 15 years.
Well, I hope you do, Arch. That's for sure. I remember Granville. Boy, what a colorful character. Folks don't remember him because it was back in the 70s, but when Joe Granville talked, it would move the stock market 1%, almost on cue, wouldn't it?
Sometimes he did that, yeah.
Yeah, he sure did.
I would love to have a copy of his talk. If anyone ever has a copy of his speeches, I would love to have one.
Yeah.
The other, another very close personal friend was Frankie Joe, who was.
Oh yeah, no one knows him. Tell the story about him because that's a very interesting story.
Well, he grew up on the streets of New York as an orphan, and a trader took him under his wing and taught him what he knew. And one day the trader was off somewhere, and Frankie, some news hit or something, and Frankie saved him a whole bunch of money. He later became the main trader for Interstate Securities out of North Carolina, but the office was on Broadway, Lower Broadway in New York. And Frankie made, I think, $20 million for the company and $20 million for himself. And he got a real big name. I was trading in Carl Icahn's office because a broker from there was in the Cycles group in New York, which I used to attend. And that's another interesting character, Carl Icahn. I sat next to him one time when he bought a whole bunch of options on IBM at 200, and then he drove the stock through 200, and then he sold the options, and then he sold the stock. This is all in an hour or two.
Yeah. Hey, Arch, didn't Frankie Joe's, he died rather mysteriously, didn't he?
Yeah, they say he died of a heart attack, but I think he didn't.
Yeah, because I remember, and he was quite young, wasn't he, like 32 or 33? He was a very young fellow.
I don't remember his age. I remember it was 84 or 85 or 86.
Yeah, it was right in that area, yeah.
And he had been written up by Barron's several pages, and he was on their yearly thing, but he said, I'm a short-term trader. It could change in 10 minutes.
Yeah, well, that's what he did, but he was very good at it. That's absolutely for sure.
Man, and a generous man, and a good man.
Mm-hmm. I remember meeting Carl Icahn, too, and he was a really nice fellow. You'd never know the guy was worth as much money as he was. He was so humble and just very gracious. The people that are really successful have a tendency to be like that, and Carl Icahn is certainly like that. Arch, I have a question.
I made 21 passes at options without a loss, and he offered me a job as a trader, but he screamed at his traders all the time.
Oh, yeah.
And his head trader introduced me to Frankie Joe.
Oh, my goodness.
But
Arch, how would the folks reach you? We've got about a minute before we have our ending here. So what's it's Crawford Perspective? Is www.crawfordperspectives.com?
Yeah.
.com. Okay.
You can just Google Arch Crawford, and that'll get it to you in the first one or two.
Okay, and you're still doing of course, I get your newsletter every month, and it's something that I look forward to. Do you have any comment about what's going to happen on this eclipse here that we have on the 21st of August?
Well, Russia had an eclipse that went all the way across Russia, and 4 or 5 days later we had a Mars-Uranus opposition, and they attacked Georgia, the country, not the state. Mm-hmm. And this one is going all the way across the United States, and within a couple of hours there is a Mars-Uranus aspect. So I'm saying that whatever violence could occur would be in short order. But then again, eclipses have a time frame of operation from like a year before to a year after.
Stay with us, Arch. We'll be right back. Stay with us. We got another couple minutes. Hold on, please.
Okay.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, with Arch Crawford of Crawford Perspectives. Arch, would you continue on about this eclipse that we're having on the 21st and how it relates to this Mars-Uranus thing that we were talking about with Russia that you were mentioning? Are you saying that we're probably going to have some type of an armed conflict?
I wouldn't doubt it. I think we're building up to an armed conflict that some people in the government want it, but I'm not sure if Trump will go along with it or not. Mm-hmm. But there is a segment that like to take us to war. The other big thing about an eclipse, you remember Princess Diana died on an eclipse. I think it was 24 hours prior to a solar eclipse. And I said in the newsletter, September 1 to 2, Venus-Saturn-Pluto combination and new moon partial solar eclipse, tragic love, socially awkward. and that's the day she died.
I remember that very much. It was August 31st. I remember that. That's a very important day for sure. And you did have that. You had a couple in there. Well, you've had quite a few over the years because you've done it so many times. Arch, I want to thank you for being on the show today, and we'll have you on again soon. Okay, my friend?
All right. I'll try to remember when 9:30 is.
Okay, buddy. Listen, thanks a lot, folks. Arch Crawford of Crawford Perspectives, and we appreciate you being with us here at TFNN. Okay, folks, let's finish up here with the stock market here. We have some very interesting patterns that, of course, completing with these ABCD patterns. The main thing is to keep an eye on that VIX index. I think that's the one that has possibly the greatest potential on bangs for the bucks. The one I'm going to post now is the XIV. And as you can see, this is the reverse of the market for the VIX index, and nobody likes it, but boy, the pattern is certainly perfect here. This is price and time, everything that you could possibly ask for as you're looking at something. This is what you'd like to see. The question is if it's going to turn and when. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.